Here today to learn pretty much what term insurance is, why it's could be right for them, and how come there is a negative stigmatism around it. Christian, you want to talk a little bit about the basics of term life insurance?
Yeah. So term is we like to call it the car insurance of life insurance. So you pay for it, you have it just in case. It's low cost. You get a lot of death benefit for the money that you pay for it. But if you don't die, you don't get it. That's where the negative stigmatism comes from. But there's so many other benefits to having term insurance, and one, it protects a lot of debt for a low cost, and if that's what you're looking to do with it, I think it's a phenomenal.
Well, what if I don't necessarily have any debt right now? Let's say I'm renting with my significant other and we're expecting a child soon.
So outside of debt protection, you have income protection. So let's say you're expected to bring 100 grand to the table every year as an annual salary, and we're young, so we're working another 30 years, 20 to 30 years. Over the time span of that 30 years, if nothing changed, no increases, no raises, nothing, you bring 100 grand to the table, that's 3 million that you're expected to bring over that time period. So if something happens to you today, tomorrow, a year or two from now, then your family and potentially your children are left high and dry with nothing.
Well, I sat down with a couple insurance salesmen, right? And one of them came to me with for the same coverage. I was looking for $1 million, and one of them came to me with a very low price, and the other one came to me with a around what I'm paying for car insurance. Explain to me why there could be such a drastic difference.
Yeah, so the drastic change in price is really dependent on how long the company is on the hook for your death, essentially. So they have to pay the death benefit. So if you're going to be insured for a longer amount of time, you're going to pay more for it.
Well, what amount of times can I normally typically expect to be insured by from most companies?
Yeah, you can expect to, depending on your age, you can get 10, 15, 20, 30-year term lengths.
Well, both of them told me that they were guaranteed until 95.
Oh, well, so that's another stigma or negative stigmatism that comes from term insurance, is that a lot of advisors don't actually inform their clients about what happens when you get to the end of your term. There's something called an annual renewable term, and every term contract turns into that at the end of its set period. So if let's say you do a 30-year term, after 30 years you've paid all of your premiums. If you didn't cancel your term at the end of that 30 years, it automatically would go to a new premium each year, increasing each year for the same death benefit that you were insured for. You're guaranteed insurable, and the company just starts charging you the annual premium for that amount at your new age.
So let's say I'm 35 now, and by the time I'm 65, you're saying at the age of 66, I should expect a new premium, even though they told me it's guaranteed until the age of 95.
Right, and that will keep going up each year. 66 will be cheaper than 67, and so on and so forth, and it just substantially and drastically increases after that term length ends.
So I'm healthy, I'm young right now. Why do I need it?
Well, going back to what I said before, is it's if something happens to you, it's a just in case. It's not a lot of money to protect your income if you have people that rely on your income, but if you don't have people relying on your income, having term insurance guarantees your insurability. So if you wanted to have a product in the future, your health rating is protected today because of the type of policy that you have. It locks that in.
Well, I was talking to my cousin, and he was telling me about I can use it as an investment and have cash in there, and that I should pay more to have that type of policy. Why should it be a term over that type of policy for me?
Why would you want term insurance as opposed to a permanent style product like
Yes.
universal or whole life? Well, those types of products come with a bunch of different benefits that we can get into, but term insurance does all the protection and protects your health rating. So if something happens to you that would change your health rating, you're locked in with a term at the health rating that you are today, which younger and healthier is the ideal time to do that. It protects that if you can't afford the more expensive types of insurance, which would be those permanent style products.
So when I look at the amount of death benefit, because my parents are now telling me I should get 100,000 of insurance. I have, like I said, I have a kid on the way, and I do okay for myself. Is that the right amount of coverage?
Well, everybody's situation is always going to be different. So if, when you sit down with your clients and you look at your whole situation, is 100,000 going to be what you need? That's what being an advisor and doing the whole, go around and getting to know each individual client, that's what's most important about doing that and determining whether or not there's no this is the right amount for me, this isn't. You can do a bunch of different types of examinations, or the way you look at everything to determine if 100,000 is right or if you need more than 100,000. And from an advisor standpoint, you have to know how to ask the right questions. And without going into it, I would say $100,000 wouldn't be enough if you're expecting a kid, because that's maybe 1 year or 2 years of your salary if you're doing well for yourself. If going back to the example before, you want to at least get your kid to being an adult, right, on salary alone. So I would look at a minimum 20 years of what your income outlay would be over that time frame, and what's the realistic expectation for that, and then you pick that amount of money to go with.
I was told that everyone I sit down with asks me about my medical history.
Mm-hmm.
And they ask me my age, and they ask me my height and weight. Why are these things important?
So insurance companies don't look at you as I guess they are looking at you as an investment, but they're betting on how healthy you are, how long you're going to live, and all of that's, when you crunch numbers, you have people that sit down and say, okay, here's some mortality charges, here's each year that changes, the cost for insurance is different. So insurance companies don't want to make a bad bet, and so they're going to analyze your individual health, and they're going to ask you the right questions: height, weight. They're going to want to check blood. They're going to want to check the doctor's records. Do you go to the doctor once a year? Which you should. It's a good thing to do, because if you don't know you have something wrong with you that could kill you, at least going to the doctor once a year to keep yourself in check is important. And when you do that, an insurance company looks at your overall health rating and then says, okay, well, we're willing to go with this. And that's when you get down to the price, and then you can always negotiate after that.
Well, there's some stuff in my medical records I don't feel comfortable sharing with people.
Mm-hmm.
How important is it for me to actually be honest about these things?
Well, that's another thing where having a good advisor and making it, as an advisor, it's your job to make the client feel comfortable about going through this process. So you talk about all that stuff with your doctor because you trust the medical professional in treating you. But when you're looking for a protection, why don't you lend that same amount of trust to somebody that's looking to protect you? So your doctors will treat you. If an insurance company wants to protect you and they're willing to, it's in your best interest to be as honest with your advisor and with the company as you can be. Because if you're honest up front, they're more likely going to work with you if you have something that they can work with. And if you're not, they're going to likely penalize you because you weren't honest with them up front.
And Christian, you're it's the best way to put it, I guess, technically a wholesaler, right? You work with a whole bunch of different insurance companies. Do different insurance companies accept different forms of risks for their clients?
Yeah, they do, and that's one of the nice things about being an independent advisor, an independent broker, is each company is going to look at different risk classes and say, okay, well, the beautiful part about a free market is there's no real restriction on who you can insure.
So what you're saying is if I'm open and honest with you, you'll be able to put me into a better situation. You'll be able to tell me more appropriately how much coverage I should have,
right,
and for what length of time.
Right, and I'm also at that point able to give you a better idea as to what to expect once you go through the application process and you get through it all. With any company, it's going to be relatively the same kind of process, and then depending on which company you look at, the risk class could be more favorable with one company than it is with another, and that's independent to the companies themselves. But
So at the end of the day, term insurance is really just a cost-effective way for me to get a large amount of coverage, just in case. Like you said, it was the car insurance of the life insurance world, right? I pay a couple $100 a month to protect my $35,000 vehicle, right? So
And car insurance in 49 of the 50 states. I think Connecticut's the only state that you don't, by law, need car insurance.
God bless you guys in Connecticut.
Every other state you have to by law. And if you have a clean driving record, you never get into an accident, essentially you've been okay with paying a couple $100 a month for however long you drive a car, which is longer than term insurance, essentially. And you're okay with it. It's there just in case. Oh, thank God I had car insurance. This jackwagon rear-ended me, so...
You're allowed to say jackass, this is YouTube.
Okay, well... So this jackass rear-ends me, and I've got insurance, so one less headache. Why don't you look at the same thing? You're gonna die eventually. It's just what type of insurance is in place to protect that. Guaranteed you're gonna die. You're not gonna get into a car accident, guaranteed. So I call it the car insurance of life insurance because it's there just in case.